Good evening, everybody, and welcome to the Lock in Your Success Trade and Market Updates for August 26th, 2012. Before we get going with the market conditions and so forth, I'd like to talk about the delta issues that we've been having with a very large difference between our Thinkorswim platform and our OptionView platform. We've been doing a lot of investigation on this in the last week, and have found out that, and on our last update, we kind of said this too. We found out that we are getting a very large skew or difference in our implied volatility and delta between puts and calls in the same month options. Now, I am aware that this, and always have been aware that happens at times. And usually it doesn't last that long, but it's been lasting a significantly long time this cycle. I think, like I said, we've been having issues for 3 months, and issues maybe even a little bit longer than that. Now, I'm not sure if something changed in Thinkorswim. I had an extensive contact with OptionView, and I found out that their models have not changed, and their way they're calculating things have not changed. And I'm not sure if Thinkorswim has changed or if this problem is only developing because of the skew in the put-call options. You see, what happens is when you do OptionView, as we were going before, if you go into the OptionView settings for your model, they're combining our put and call skews, and Thinkorswim, I found out, is not. And we knew that before. We were telling you that because these were average, they were actually a little bit closer to reality. And we could tell by the profit and losses in our position that this was a lot closer to reality. When we go into Thinkorswim, well, here's what our analyzed graph looks like here. You can see actually this looks pretty nice for an M3. The delta is minus 57. We come into our Thinkorswim, the exact same positioning, and we're actually running into a positive delta. And you can see it looks really bad to the downside. Looks like we're over hedged to the upside is what it looks like. And we went over kind of that changing any of these models really didn't do any good for us. So I was looking for if somebody knew of a setting in OptionView where we could combine the put and call skews, and I did have one of our followers did email me and told me how to do that. So, or at least that's what we think it's doing. So here's what we do. We come in here. It doesn't really matter if you're in the monitor or if you're in the Analyze tab. You just hit Setup, Application Settings, and you come down here right in the General tab down to Volatility Strategy. And right here it says individual implied volatility, if that's what you're set on. Obviously you would check this. Maybe you're already at a different setting. But they have volatility smile approximation. It doesn't tell us that it's combining the put and call skews, but I'm sure that's what it's doing. Because when we put this in here and we hit OK, it converts our model very similar to our OptionView model. It shows us that we have about minus 46 delta versus, again, this is after hours too, so versus minus 57, which is about 1 delta per butterfly. That's close enough. We can work with that. So my only caution here is this appears to correct the issue. I don't know what the other consequences in the analyzed graph are of using that setting. So I don't know if your profit and loss is no longer correct. I don't know if it's going to be changing other projections and so forth. So what I'm going to do here is I'm going to be using this setting this week, and I will be comparing it to OptionView as we go along. I'll be watching my profits and losses, and with the market open, and we'll see what the consequences of using that setting are. Right off, I can tell you that there is a difference in my profit and loss, and that is not correct. So that may be an after hours thing. That may possibly be an after hours thing. We'll have to see when the market opens. So what I'm saying is when I go here, set up application settings, I come down to my volatility strategy. I come in here and hit individual implied volatility and hit OK. My profit and loss is $26. When I come over and hit it again, applied volatility strategy, hit OK. My profit and loss is now projected to be at $608. So that is a major difference. Option view tells me, and again, my option view profit and loss is actually going to be off a little bit, is telling me I'm basically flat. I'm $11. So it's giving me the profit and loss. Think or swim was on the other setting, and it is, however, option view is telling me it should be up here somewhere. Let's see, what is that reading here? Option view is telling me it should be 1500. So we'll have to see what happens when the market opens. We get some wacky numbers afterwards, but that does look very promising, and hopefully that will take care of the issue, and we can move forward. If not, I have some other temporary solutions, but let's see if this one works out first. Okay, let's take a look at the markets. First was the SPX. If you remember last week, we were saying we were expecting this to shoot up into our previous highs for the year, which it did, and then probably back off, which it did. So far, that's pretty much what we expected. That's completely normal, and we did pull under this trend line, which again, I would actually expect this to come down to at least our 20-day moving average, possibly all the way down to our 50-day moving average before we break higher. However, we're not sure. But as for right now, we're in a temporary pullback. If this thing just kind of holds this range, then we're probably just going to hold the top here for a little while. Longer term, I am predicting, or as much as I can with my crystal ball, that it's very likely we're actually going to hit all-time highs here, but I don't think it's actually going to happen till out here towards the end of October. I would say by October expiration we'll be up here. In the meantime, we may pull all the way back into the 1375 area. It remains to be seen how deep this pullback is. It's going to help us determine at the speed of which the market's going to continue up. If we come all the way down to here, we're probably going to get a very aggressive up move into our all-time highs. If we do not come, if we only hit our 20 moving average, we're probably looking at a grind, just a constant grind here till we get up into this range. So basically, I am still bullish. However, we have to be aware of a pullback. If we get a decent pullback, we get some really good support right here. We have some horizontal support. We have moving average support with our 50. Really good excuse for people to buy. So especially if it happens in the next week and a half, if we come into our trend line support also, that would be very, very bullish and be expecting a fairly large up move. However, I think it's more likely we just kind of grind here. Let's look at the Russell. Actually, before we do that, let's look at the Dow. Same thing with the Dow. We're saying we're going to come in, hit our yearly highs. Pretty much did that when we backed down to our 20-day moving average and bounced. And this is one of the reasons I think that the market's going to grind, is because the Dow bounced at the 20 moving average. Had it broken through and hit the 50, or coming down to the bottom of its trend line, then we would expect a more aggressive up move. But this is very typical. Come down, hit your 20, and then continue moving. A strong market will do that. And if you look at the NDX, we broke out of our channel, which is sometimes considered a blow-off move. It's kind of interesting. But we basically came to new highs, came to the top of the channel, tested it as support, and started to take off again. We will need to see where this goes. We break higher, it's going to bring everything with it, and it stays hard. We come back down, we're probably going to come down to, well, I would say 27, 25, depending on what the other indices do. If they start breaking support levels, we'll come all the way down. I don't think that's going to happen. I'm, again, more of the opinion that we're going up. And let's see here. We'll go back to the Russell. And I pulled some trend lines off of the Russell. But basically, we came up into this area here. Whoops, let me go here. Which is the top of this. The top of that. Top of here, top of here. This isn't a surprise. You know, we topped out from, we were last week we were looking at this level here. We're saying we're probably going to top out right here. Which in essence, from an end of day standpoint, we did. We did have a penetration of that just coming up into this range here, these previous tops, which shouldn't be a big surprise to anybody, and then a reversal. And we're more or less just coming back into our trend again. We have nice support down here. I mean, we have a little bit here on a shorter term charts, but realistically we got some nice trend line support coming up and some nice moving average support. So I would be surprised to see us come down into the 795 area and then continue to bounce into this triangle pattern here. We'll see which way this thing breaks. Again, I think it's breaking to the upside. I think we are going to all-time highs, and I believe that is going to be in October. Okay, so that's my my thoughts on the market, and we will take a look at our positions here. Here is the September M3 position with the Greeks corrected. With that, I am actually showing that I am up approximately $11 on option view. 619 here. I actually have to go back into my account and actually check what that is. I believe it's closer to the $11 range. We'll see what it comes out. But either way, we're in no trouble. Our delta is good. It's right around minus 50. And our data looks good. Our Vega looks good. Everything looks fine here. We're going to see if we can get... I'm going to lower the profit target here a little bit. 5,000 was the initial one, but I'm going to lower it because we had some trouble with the Greek issue. And one of the things I usually do, if I have a trade that I've put together and I expect to get 10% of planned capital out of the trade, or in this case $5,000, and I make a mistake that's obvious. So I have a trade is designed to make 5,000. I make a mistake that's obvious and I lose because of the mistake I made. And like I said, I was only going on the Greeks, the position that I had, the way that they were told to me. So it's not really my mistake, but it's something that's obviously costs me some money in the trade. So, and I am estimating it cost me about $1,500. And since that cost me $1,500, I'm pulling that right off my profit target and dropping it to $3,500. So that's our new target. We'll see where we can go. See what we can do this month with this trade. And we also have on a... Oh, I think I was also going to go over too during the week. We added some more verticals in here. I actually talked about this, I believe, earlier. 4 790, 780s, and then the next day when the price came down, we added another one, 790, 780. So this is looking good. Let's delete our simulated trades here. We will take a look at our Bearish Butterfly, and this is with our corrected Greeks. I think it would be interesting to look at this in option view just to see what the Greeks are. But we are at about $25 profit. We are towards the back side of the graph, and I mean the position looks fine. We're overcapitalized in the trade by about $1,500, and that's primarily due to the very extremely low volatility environment that we're in. Again, this is a high volatility trade. It loves it when the market's swinging around during entry time. Doesn't like this grinding stuff. So we're kind of in a... This is not the best environment for this, but it's still doing perfectly fine. If we take a look into option view, let me just pick an account here. Make sure there's nothing in the T-log. Let's delete this out. Okay. And we will throw on this position, see what our Greeks look like, because I'm just kind of curious. This gives us a positive 22 delta. Analyzed graph looks like that. And our Thinkorswim gives us a positive 15 delta. Not too far off. I can see the line looks a little bit different. Let's change the setup just for giggles. Yeah, drastic change in our profile. It's funny how this one actually looks more like option view without that. So again, that's going to lead us to really take a look at to see how this is going to react over time. Because right now, the bearish butterfly is acting more normal with the other volatility setting in Thinkorswim. So, like I said, we always have to figure out what the consequences are of changing these settings. So, let me put this here for now, and we'll go like that. Actually, the delta is not that far off either way. It's just the profile of the curve certainly looks more like option view with that setting as it previously was. Just at the matrix and the analyzed chart again. Yeah. Well, not really. Like I said, the peak is back here. It's kind of in the middle. One's more one way, one's more the other way. But like I said, we'll look at that when the market's open, because that's really the only way you can tell. But I think this does look fairly promising. Okay, and also while we're here, I entered the bearish butterfly for October. This month, as we were saying, we have extremely low volatility, and this is not a low volatility trade, it's a high volatility trade. Not that it doesn't work, it's just much more expensive. I paid $12.10. I know some people paid $13, $14. Gives you a narrower range, gives you a delta theta ratio that's a little bit less favorable than normal, and you're going to have a decreased range to the upside. That's just the way that it is with the trade in very low volatility environments with the butterfly. But here it is. We will see how it does for the month. I'm assuming that it will probably do perfectly fine. Actually, if we get a nice move into the 850, 860 area and it backs into here, that will be very nice, which wouldn't be an unusual move as far as I'm concerned. So again, I'm happy with the entry here. More than likely, if we don't get a decent up move here, we may end up trading this with a third of a position for a while. We'll see if we get that move enough to kick us in or not. I do have like I said, a modified entry on a bigger position, but that's something we'll be going over later when we start doing advanced bearish butterfly stuff. But for now, those are my positions. That is my opinion on the market, and we're going to be monitoring this toss and Thinkorswim with this new setting over the week, and I'll let you know what my feelings are on that towards the end of the week. All right, have a great night, everybody, and enjoy the last week of August.